final guest today just raised his year-end S&P 500 target to 5,600. That's up from 5,100. In his view, it's all about the mega caps. I want to bring in Scott Chronert, head of U.S. equity strategy at Citi Research. Make the case, my friend.
Well, thanks, Andrew. I think the setup here is, when you think about it, fairly straightforward. When you look at the year-to-date index return, the way we break it down is that when we ran the math at 14% or so for the S&P, 5 percentage points of that came from NVIDIA, 4 percentage points came from the rest of the Mag 7. That left the remaining 493 within the S&P contributing about 5%. Essentially, what's been happening here is that the fundamental beat and raise dynamic for NVIDIA and the rest of the Mag 7 has stood out this year and has lifted expectations for that cohort of companies that in turn has influenced where broader S&P earnings are going. So to a certain degree, what we're really doing here is truing up our starting point for the year 5,100, which assumed a contribution from the Mag 7, but not to the extent that we're getting right now. So where we go from here, we're still looking for a very strong earnings follow through for that component of the market going into the end of the year.
Right.
We are looking for a contribution from the rest of the Mag 7. That becomes more of a story as we head into 2025, though.
Scott, what's your Fed prognostication in all of this? What does it require to get to the 5,600 number? And by the way, obviously the 5,100 has already been blown through. So unless you thought the whole thing was going to reverse, this is not wild.
Well, that's the point of this, is that this is fairly fundamentally premised. What you really have to get comfortable with is that the multiple for the S&P is going to hold in this 22 and a half range, which is roughly where we are currently, but it's predicated on the fundamental backdrop for the Mag 7. Now, in terms of the interest rate environment, heck, we've argued for some time now that the mega cap growth part of the market has actually benefited from higher Fed funds rates as a function of the interest they earn on their cash. Now, in terms of the Fed outlook from here, the Citi Economics view is first cut in September, 3 cuts for this year. I know consensus is closer to 1. I'm less concerned. I want to know that the pivot is coming. And in terms of a less restrictive Fed, we do think we're seeing some fraying around the edges more broadly in the economy. And I think the Fed's going to be in place to ease later on. That becomes more of an influence on the 25 fundamental outlook than it does fundamentals for the back half of 24, though.
Okay, Scott, we are going to leave the conversation there. We will see where things go. By the way, do you think we got to go, but do you think it ticks down before it ticks up?
Yeah, we think that there's the growing risks are pretty clear here. We think there's room in the second half of the year for a 5 to 10% pullback, and we just want to be prepared to buy into that eventuality.